Hey guys, progress efforts on this one. Welcome to my YouTube channel. If you are new to my channel, kindly hit the subscription button and turn on the notification bell to stay tuned whenever I post a new video. Alright, this is the weekly analysis on gold. As you can see on the screen, I use indicators to trade. Most importantly are the moving averages and fractals. So in case if you imagining the settings I use, so I use 220 moving averages and other moving averages. Here are the settings. The first 220 moving averages, you can see the period is 20, the method is linear weight and apply to weighted close. That is XAUUSD. So the second moving average, it's also 20 moving average, but this time the period is 20. As you can see, the method is simple. Apply to weighted close, HLCC4. You can as well choose the color of your choice. And the third, here, most of the times I use 34 moving average. As you can see, the period, but what you are seeing right now is 84 moving average. They all have what they do for me. So you choose the one you want and check if it tallies with your own trading system. So I use it basically when I want to indicate some certain things in the market. So that's by the way. So the method is smooth, applied to typical price HLC3. You can choose the color of your choice. Okay, this is just the normal fractal. The settings is normal. All right, let's dive into the analysis. Also understand that these lines, as you can see, indicate the beginning and the end of the week. Yeah, the trading week. Let me also show you properly. So they indicate the beginning of the trading and end of the trading week for the last week. So as you can see here, this is the last candlestick for the last week, which was the last week candlestick are these ones which did shaggy to a lot of people in the market, and I will tell you why, because I would like us to dive into some of the things that happened last week in the market in order to understand where we are going to this week. So when you look at this area, the market started retracement from this angle. Yeah, and of course I caught the sell. That's by the way. Now the point is, when the retracement started, where was the market targeting? Right? The market was targeting this area here. This was where the big boys in the market bought gold, which pushed the price up to this place. Yeah, before the retracement started occurring. Now, this is on the daily time frame. I'm going to take you down to this at least minimum of 1 hour time frame for you to understand the market structures and how it works. So for the market to gain momentum to start bullish again, it needs to come to retest this point of interest. So you saw a lot of people, and I will tell you why a lot of people thought, okay, the market was ready to buy on H4, and it continued to defy the market structure until the price got to this area. So let's go straight to H4 to see what happened. Remember, like I told you, I use this 20 moving averages to indicate quick market trend. But overall, the 84 moving average is what I use this to indicate the long time trend. But at the moment, let us go to 4 hours time frame. So guys, here, if you remember the point of interest, the demand and supply area in daily time frame, which I shown you here, this is actually the candlestick that started the trend. Let's go back to 4 hours time frame. So that particular candlestick was what created all these things you are seeing in this place. So it's surprising, right? So the implication here is the same candlestick shown the entry for those who uses engulfing candlestick. The first entry in the market was this here, this area. So by myself, I usually make minimal entries in this area or at the closure of the same candlestick in this area, while the SL is here. But to be very sure, sometimes I used to wait for the 220 moving averages to cross, as you can see, before I start looking for the nearest demand and supply area, as you can see here. So immediately this candlestick engulfs it. This is my entry. But the point of what happened last week was when this retracement started, right? Most people expected the market to start buying again from this area. Which was not what the market actually did. I will show you why. The reason the market did not start buying at this area as expected was because of this. The crossing of the 220 moving average. These are the things I use to avoid distortions in the market. But most of the times, it can actually fail, but maybe 1 in 30 times. So, let me tell you why. Most people marked here as point of interest, waiting for the price. As you can see, the price rallied down, touched it, tried to bullish, but could not. It's retraced back. So, but people were asking, why was the market defiling the structure, as you can see, with fake spikes, too many fake spikes last week, which a lot of people were saying, oh, market did us shaggy, oh, we lost a lot of money, this, that. The reason was simple. The same daily time frame, let me show you, candlestick here. The tail of this very candlestick created a very strong demand and supply on H4. This place. Here is it. So this very candlestick was what most people did not understand, that immediately the market defied this very demand and supply area, which was the closest. While the market was retracing, let me show you. It was actually the closest, as you can see here. Immediately it defiles it. The next thing it will start looking for is this very one, which was the one I shown you from the tail of that bullish candlestick on daily time frame. So look at this. What I usually do personally is to mark these areas. Yeah, immediately the market get to it, people used to mark the body. Yeah, but I mark from the beginning and the end of the tail, because market always react within those areas. So if I mark them this way, immediately the market get to them and reacted inside here before bullishing or breaking down. And the only way I will trade is when the candlestick crosses above the end of the tail and closes above or closes below. Then I will know that the trend is continuing down or up. The same thing on this. So when the market defiled this very one, I know the next target was this. Yeah. So let's go to the retracement to have a proper view of what I am saying. Right here, you will see immediately this very candlestick here closed below the 20 moving average. Note that on H4 particularly, I'm not talking about all these small time frame where people go to play with their money. I'm talking about on H4. Once a candlestick closes below it, until another candlestick shoots back above and closes above, do not think that the price will ever go back. It's just a secret which you must learn from this channel. So have it at the back of your mind. And once it was still the same candlestick that retested the body, the body of this demand area on the former bullish trend. So a lot of people started buying, which certainly will defile. This area certainly defiled, because why it usually defile is once a candlestick like this one, let me show you this red one, engulfs down, the price will continue moving downwards. So the first spike was this, which touched this demand area. And of course, like I said, if price did not close properly, bullish price did not close properly above it, or properly below it, I am not expecting the market to either go up or down. Now, the market continues spiking downwards until when you look at the tail was here. Let me get a straight line. One moment. The tail was here, right? The two tails. I mean, it's in this very area. So when you look at here, you find out that market was just playing people within this area throughout last week. And while people were busy saying buying, selling, the market continued to spike up and down because whenever a candlestick gets to another candlestick, that is, a bearish candlestick gets to bullish candlestick area, it is certainly going to behave in the manner to which that same candlestick behaved. So this candlestick was just doing like this the last week, as in moment, it was just going up before it actually closed the way it closed here last week. So the same way you should expect price when price gets to it to react in the same manner. And I told people in my Telegram group that this candlestick is actually very long and they should expect a long drama in the small time frame within this very candlestick. So until on Friday, the same way it used speed to bullish up when it wanted to close, you look at this very candlestick, it also used the same speed to bullish up. Then the point of interest here is when you look at from this side, there was no place here where this bullish candlestick, any of them here, properly engulfed the selling candlestick. I'm just giving you the secret of market reversal until this place. And when you look at this bullish candlestick, it is a message. This very one is a message which you must understand properly. Follow this video to the end. It might be long, but I am just trying to make you, the viewers, or anybody that will come across this video, to understand how gold price reacts, what moves gold price. Because I was meant to understand that to trade gold or trade any market successfully, you must follow what the candlestick does, not what all these mentors or maybe a lot of people will tell you that the market will do this, will do that. Market reaction is the point. The structures of the market, the language of every candlestick matters a lot. And this is just what I'm telling you. And I will tell you why this candlestick did not break, or do I say the retracement did not break below this candlestick. It is simple. This candlestick is a bullish candlestick, as you can see, a very strong bullish candlestick. And when you see the place it closed, there is no wick. Yeah, you see, like this wick, it has wick on the tail, but no wick here. It simply indicates a strong interest, a strong buyer's interest, that a lot of buyers, very big boys, the market makers, are in. And so long as the price did not break below it, below the body, I don't expect the retracement to continue downwards at the moment. That is coming next week. That is it on this side. And then let's go to DAX. If you look closely here, you will understand that this very candlestick already closed inside the 220 moving average. The point here is there is every tendency that the market is going to bullish coming week. That is tomorrow, which is Monday, till Friday. Or it is going to range sideways before bullishing this coming week. And I will show you how to find your entry from here. So this is how to find your entry. If you look at the bottom of this candlestick, you will see another message passed by this very candlestick, the red one. It passed a very strong message, and we will go down to 1 hour time frame to see that message clearly. The implication here is what I told you regarding engulfing candlesticks. You find out that this green one, this bullish candlestick could not engulf, this could not engulf, all of them could not engulf until this very one. So, which means if you are in the market with your eyes open, you are supposed to cut, or do I say to catch a buy from here. The first entry on H4 should have been in this place with your SL here down and entry up here. But if you did not make the entry, let me tell you how to find another entry point. That is where sniper traders, or do I say the big boys, usually come in. I will show you why. Now let's go to the indicator. Yeah, the analysis tools for the MT5. Sorry. So we are going to mark this place. I forgot to tell you before we continue, yeah, that remember I told you I used to mark from the body. If it is uptrend that I'm looking for, I'm going to mark from the body up and the tail down. But if it is a downtrend, like in this place, this up, I'm going to mark from up, as you can see here, this area. I'm going to mark from up and then from the body down, because that is the where the price is going to react from. Let us focus on the expectations for next week. So I have placed these horizontal lines from the body and the tail for this last week. So here is what you are going to do. You're going to add shape. Yeah, you have to be patient for this video, but you will be happy that you'll be happy that you waited patiently. All right, so if price of gold remains inside this place, there are two implications. Once the price engulfs on H4, this red candlestick, there is possibility of the price to do this and continue bullish or do this and come back to this place before going up. Yeah, but let's go to 1 hour time frame to look for exactly what we expect. So here in 1 hour time frame, you'll be surprised to see something different entirely. Yeah, so the 220 moving averages, like I told you, once they cross, it will be a very strong message indicating where the direction of the market will be heading to. As you can see here, when they crossed around this area, it was a very strong message that the trend has begun down. And since that time, you will agree with me that the market never crossed back until it crossed below the 84 moving average down to almost the 200 moving average before it crossed back in this area. So guys, I expect the market next week, yeah, to retest this place. As you can see, the 84 moving average, the price is still below it. As you can see in this place, which means the possibility of the market retracing down is there before going up. And this is the area. This shape was for H4. And when you look deep now, you will understand that in H1, yeah, the same engulfing candlestick started at this area. Yeah, that's where the body of the point of interest candlestick emerged from, where this very bullish candlestick engulfed it from. So you are going to do this get another shape. Remember I told you it must start from the shape must start from the body. It must start from the body of the candlestick to the tail. Yeah. So as you can see, we have reduced the noise probably created on H4, yeah, to a minimal level. The same way, if you go to smaller time frame, you continue to reduce the noise. But like I said, I trade between 1 hour H4 and daily time frame. So if you look at here, unfailingly, the price is on almost, do I say 85% likely going to do this on Monday and come back to this place. Yeah, probably do this or spike off before trending back up. And this area is actually the most strongest resistance area you are going to encounter this coming week. So take note of that. What I did not show you was that this bullish engulfing candlestick, yeah, on H4 did not actually engulf this H1. Let's do this. Let's change the color to black because I want you to understand properly how the market behaves. Good. All right. So these two black lines are actually the tail of this strong-headed candlestick where the price has been reacting around. This H4 candlestick. The implication here is until the price of gold engulfs this black, yeah, and closes above or below, the market will not speedily bullish up or bearish down. So that I have given you a trading idea does not mean it is just going to happen exactly, but I'm just showing you the secret of what to expect. So this means these two black lines are still very, very key areas to look at because they still have a lot to do in the market. Come next week, immediately you see the price, the bullish candlestick engulfs it and close, maybe bearish, engulfs it and close. Then expect the price to either continue or go down. But personally, from what I have seen in the market, using my own strategy, moving averages and everything, I am giving this place uptrend come next week 80%, and this place 20%. Yes, arguably, the price of gold is going to continue retracing in the future time. That is from what it is showing on weekly time frame. But at the moment, I don't expect the price to retrace or continue the retracement the way it did last week. No, I don't at the moment. So this is what to expect coming week. Let's go to H4. Let me show you once again. You expect this, probably continuation for retestment for retesting of the continuation to retest the bullish movement, and then this comes down to look for this other block. You also see the same other block on H4. So the price is going to react here. Once it comes down, it's going to react and then probably coming next week. So guys, thank you for watching and thank you for being here. Kindly subscribe to my YouTube channel if you've not subscribed, because every week I'm going to be dropping a trading idea of this manner, and probably the more the video is coming, the more it will be getting better. And I will add the Telegram channel. You can join me for daily update, because I do update on a daily basis in my Telegram channel. Bye for now. I'll see you guys on my Telegram channel.